Welcome back to Fast Market, everyone. Kevin Hinks back here for our middle segment of the show, and that always brings in LikeFolio. For that, we'd like to bring in Megan Brantley. She's the Vice President of Research at LikeFolio.com. And JJ Kinahan has agreed to stick around and torment us for another 2 segments. Thank you, JJ. But Megan Brantley, you know, it's the holidays, and we're talking about Disney. Why not? Not only we have several things going on in Disney right now. Might be the most important is their CEO is about to leave the company, Megan. But what do you have in terms of interest in this company?
Yeah, I don't think there's a more magical time to be talking about Disney. And whenever we look this from LikeFolio's perspective, you know, we really look at the consumer-facing thing. This is a huge, huge company. And the 2 areas where we feel like we have really special insight is related to streaming and then also related to parks. And so I think last quarter, you know, investors were a little bit disappointed after Disney reported there was a slowdown in that streaming subscriber growth. And our data, at least on this front, we're not necessarily seeing any signs of improvement yet. We're still seeing those continue lower on a year-over-year basis, at least among our users, which are going to be these English-speaking users. You know, we're not necessarily going to capture that international growth component where Disney Plus has really been growing. But on the positive side, we are seeing continued signs of improvement for visiting a Disney park. So those mentions have increased by about 46% year over year. We're still not quite to the 2019 levels, pre-COVID levels, but we are showing signs of continued improvement. We see those numbers even growing into the current quarter. And I believe that the week between Christmas and New Year's is one of the biggest weeks for Disney parks. So we're going to be watching this really closely, especially over the next week. But so far, it's nice to see that, you know, consumers, at least according to our data, aren't spooked by fears about the Omicron variant or things like that. They're still traveling and they're still visiting these parks.
Hey, Megan, you know, first of all, great to see you, and Merry Christmas to you. All that said, you know, what concerns me a little bit about Disney, to be honest, longer term, we're seeing a nice reaction in the stock today, is I look on our company profile at TD Ameritrade and see how the mix has changed of how they make money. It used to be parks was #1, you know, right before COVID started. And now parks is number 3, about 23% of their total revenue. And media has now grown to 35% of their total revenue. So it is good to see the parks picking up. But how do you see that mixture now in terms of them as compared to Disney Plus and some of the other areas that they're involved with media?
Yeah, I think that this just really shows why this original content is really important for them. I think that earlier this week, maybe Andy was on the show and we were talking about how well Netflix was doing when it comes to original content, because they're able to crank out and continue to grow despite being seemingly so saturated. But with Disney, we're seeing some tempering in those mentions. So the new subscriber mentions, I think, are about 30% lower on a year-over-year basis. And a lot of that, whenever we look at it, people are talking about, you know, there's just not this new content that I'm watching. And this is, as you mentioned, a more significant sector for them. And we're seeing this kind of tempering, not just with Disney Plus, but also with their Hulu brand, and then also even with ESPN Plus, just in general, some waning in that growth and just less enthusiasm from at least English-speaking consumers when it comes to the streaming platform. And I believe the company noted that, you know, they don't expect this content cadence to pick up until maybe even the fourth quarter of 2022. So this is something that, at least in our data, you know, we're still seeing this growth continue to decline even from last quarter. So I think the bar should be lower. And if it's not, that may set up for a little bit of disappointment, at least in the next few quarters from a streaming perspective.
Megan, based on your data, what do you think? I mean, let's face it, Disney has done a great job of creating a streaming empire within the walls of Disney as we see them right now. But what's their biggest hurdle going forward for this company? And I'll give you a hint, what I think it is in terms of streaming. They don't have a real passion for going after movies that are a little R-rated or a little edgy like Netflix does, right, with some of their shows. Are they always going to be hamstrung by their inability to do something like that? Or are they going to always be wholesome, stay in their lane with wholesome viewing and just not move from there?
It's going to be interesting to see how they do it because it seems like they could leverage other streaming sites like their Hulu for some of this, edgier content, as you mentioned, and maybe they haven't done that well in the past. Because I think that the Disney brand, that is something that, at least when I have younger family members over, it makes me feel good to be able to let them pick out whatever they want on Disney Plus. I don't have to check it.
Right.
But with some other platforms, you do have to check. So I think that it's almost like a blessing and a curse for Disney Plus specifically, but I do think that is partially what's inhibiting a lot of this growth because, for a while they had The Mandalorian, and The Mandalorian was a little bit more of that edgy content, if you will, but that only went so far. I think WandaVision was a little bit edgier, but still more wholesome, but that only goes so far. So, diversifying the content to the max that they can, I think is really critical, but then potentially even, leveraging this Hulu channel, this other streaming site that they have where they aren't so insulated within that brand.
Yeah, it'll be interesting, Megan, to see if I believe that's why they created Spyglass Entertainment years ago, was to have the edgier brand within Disney walls. So it'll be interesting to see if they do something with that. I think it's a great point. One of the other things that I wonder about, though, and I don't know if you can really track it in your data, that I believe is the thing they're missing, or at least somewhere they've taken a bit of a hit, and I think it's more evident at this time of year than in the past, is the merchandising that went along with so many of these movies. You're still seeing some of the merchandising being successful as they remake some of the movies from the past, et cetera. In fact, I just saw something for Toy Story the other day. I'm like, wow, that's pretty amazing. But, overall, how are they able to continue that machine? Because they were incredible at it, particularly come Christmas time, when kids would be looking for that doll or whatever it may be under the tree.
Yeah, whenever I was a child, the Disney store was one of my favorite stores to visit in the mall. I would drag my mother in there to go shopping for these things, like you mentioned, especially all the princess supplies and things like that. I mean, they have a great arsenal. I think that one thing they are doing is they are, partnering within Target stores. And correct me if I'm wrong. I think that is an interesting move to help them, that they could potentially leverage that merchandise, like you mentioned. But yeah, that's a really good point. We'll have to look to specifically to see if we can pull out and isolate that data, because I'd be really interested to see, what that trend line looks like, because it does feel as though it has waned a little bit.
Yeah.
Megan, when I'm looking at your mentions of visiting the park and mentions overall, they're visiting the park, Disney, they've all dipped, right? You've got visiting the park up 46%, but it still looks like it's recovering from a pretty substantial dip here.
Yes.
How do you guys project that? What do you see in terms of your data about going back to the park? What do you guys read from that? Are you getting the normal significant amount of data points that give you that 46%? That seems incredibly high for the world we find ourselves in right now, Megan.
It is. It's really interesting. And one thing that we like to do, too, is we look at other trends just in general to see, kind of get a feel for the pulse of the consumer. And whenever we look at travel trends specifically, those are all doing really well. We're actually seeing elevated mentions of international travel. We see elevated mentions of people who are booking flights for vacation and things of that nature. And actually, whenever we look at the airlines specifically, even on a 7-day moving average, this is something we're tracking really closely, we see continued improvement on a quarter-over-quarter basis. So we're not necessarily seeing any of these, resurged COVID fears impact actual consumer travel plans yet, which I think is really good if you're Disney. You want to see consumers who are still out there and willing to travel. But those are, those I think are areas that continue to show signs of normalization, but as you mentioned, right, we're not back to 2019 levels yet, but we're slowly cranking away. We're getting there.
So Megan, back to one last thing, if you don't mind, on the media side, because I just think that it's so interesting. As you look at their media stuff and you compare them to the Netflix of the world, and I don't know if you can compare them to like an Amazon Prime, et cetera. Is there anything that stands out to you in the data just straight from media as compared to their competitors?
I think that one thing that Disney Plus has going for them is they have a really high level of consumer happiness. That I think that they lead the pack alongside Apple TV. And part of the reason that Apple TV is so positive is because of its Ted Lasso show. So you have to kind of take that with a grain of salt, because Ted Lasso was incredible. But Disney is doing a good job of keeping its existing user base happy, and we don't necessarily see a lot of cancellation mentions. So I think that's good. It just is a sign that they need to continue to focus on that streaming to continue growing. But Netflix, in contrast, we're really seeing a surge from Netflix of late, partially driven by the Squid Game show. I don't know if you guys watched that or not, but it's really interesting because what we see is when there are these big shows like that, this big, a really popular piece of new content, new users still stick around. Even after the initial, Squid Game spike, these levels are still significantly higher and actually improving into the holiday season. So I think that it shows the power of content and also an area where Disney can improve. But from a happiness perspective, at least, its consumers are very happy.
It's the happiest place on earth, Megan.
Right, exactly.
Megan Brantley, I have never watched the Squid Game, but apparently I'm the only person on the face of the planet that hasn't, apparently by the numbers that they're putting out. But Megan Brantley, Vice President of Research at LikeFolio.com, thank you so much for coming on, spending your morning with us. We appreciate you always. Have a great day, Megan, and if we don't talk to you, have a great Christmas.
Yes, Merry Christmas,
all right,
guys.